Hey guys, what's up? This is Rudy, Mr. Investor or Mr. Oxy. It is Saturday. It is September the 5th, 2020. A number of people have commented and asked me what my position is in Oxy. Some people have asked, do you actually own anything other than Oxy in terms of energy? And some people have even asked whether Occidental is paying me to make videos. So I guess I might have been sounding a little bit too bullish on some of my videos. I'm not sure. Anyway, the answer is I do own other energy stocks, and I also do not get paid by Oxy, although if anyone from Occidental Petroleum is watching this video, you are more than welcome to pay me, and I will give you the address to send a check as soon as you comment. So what I'm going to do today is I'm going to give you a quick look inside my energy portfolio. I also own a couple of ETFs which may have positions in energy. I'm not talking about those, I'm just talking about my direct holdings and 4 of my largest holdings in energy, which I'm going to share with you right now. So the first stock that I'm invested in is Total. Total is a French energy, oil and gas company. I've been in Total since 2019. And you might view a potential link there in terms of the timeline to Occidental Petroleum, because initially when Oxy was looking at acquiring Anadarko, Total was positioning themselves to potentially scoop up all the African assets of Occidental, or not necessarily all of them, but most of them. Total represents approximately 12% of my energy portfolio. It's an ADR, which is for those people not familiar with this, it's an American depository receipt, because Total is a French company and trades on the French stock exchange. So in the United States, where I live, as a US tax person or resident, I purchase Total's ADRs, so American depository receipts. Why do I like Total? Right now, it's kind of trading in the middle of its 52-week range between $22 and $56. It's trading at about $40. It's a large a large market cap oil and gas company, but I really like it because it pays a huge dividend. It hasn't cut the dividend, and it's currently paying me approximately $3 per share, and I hold a fistful of Total. If we look at Morningstar, which is one of my favorite analyst reports to review when I look at some of the companies that I invest in, I can see that the current market or last close was about $40, and Total has a fair value of about $60 according to Morningstar. And you can see, as I just mentioned, Total is a large corporation in the oil and gas industry with a market cap of about $102 billion. Company profile down here at the bottom: an integrated oil and gas company that explores, produces, refines oils around the world. I think many of you might be familiar with Total. In the fourth quarter of 2019, it produced 1.7 million barrels of liquids and 7.3 billion cubic feet of natural gas. So not quite as large as Occidental in terms of output, but sizable anyway. But it also gives me a little bit of offshore diversification because it's a French company. The next one on the list is Enbridge. Enbridge is probably a name that most of you will not be familiar with, unless you're Canadian, in which case you'll be very familiar with Enbridge. Many people in the eastern seaboard of Canada, and especially in Ontario, which is Canada's most populous province, are unfortunately very familiar with Enbridge, because Enbridge is the company that they pay for heating and cooling, and in Canada, heating and cooling costs quite a lot of money. So Enbridge is almost like a proverbial mobile phone operator from that point of view, because people are sending them a check every month. So they're not necessarily just looking to sell barrels of oil on an ongoing basis or pipe it, because they also have integrated pipelines, but they are actually the energy provider to businesses and residences, especially in Ontario, which, as I said, represents almost a third of Canada. It's its most populous province by far. Once again, sort of in the middle of its 52-week range. It's also a large company. It's got a $64 billion market cap. Its PE is too high for me at 43 to generally open a position, But you can see I've been in Enbridge since 2012. What that actually means is that during the past sort of 8 years or so, I have exited and taken profit along the way. And today I have 22% of my portfolio invested in Enbridge, and I'm playing mostly with the house's money based on the fact that they have been richly rewarding me with a dividend, which currently is $2.45 per share for an extended period of time. And the stock has also over time shown some growth. So from time to time I've cashed out, taken some money off the table, and eventually I'm left playing with the house's money. So Enbridge is almost like a free position for me, even though it occupies 22% of my energy portfolio. Quick look at Morningstar once again. Enbridge closed last time $41. Its fair value is about $53, so I'm not going to get the same kind of growth as I expect from Total, but it's still going to give me some good growth as long as I'm patient and wait for the cash register to ring within the next few years or so. Company profile: Enbridge is an energy generation, distribution, and transportation company in the United States and Canada. Its pipeline network consists of Canada's mainline system, regional oil sands pipelines, natural gas pipelines, etc. It also owns and operates the regulated natural gas utility, that's what I was talking about, and Canada's largest natural gas distribution company. The next one is another Canadian one, so you may not be familiar with this one either. It's Pembina. It's one of my larger positions. It occupies 32% of my energy portfolio. It trades on the New York Stock Exchange as PBA and on the Toronto Stock Exchange as PPL. Once again, like most of the energy companies, it's kind of sitting in the middle of its range. It's a smaller company with a market cap of $13 billion. It has a reasonable PE. It's not the type of PE that I would look to invest in if I was starting right now. Generally, I look for a PE that, as a starting point, might be between sort of 10, 15 or so. In other words, something that has a PE ratio below the NASDAQ average. You can see I've been in Pembina for a long time as well. So I've been scooping this nice big fat dividend, $1.93 per share for about 6 or 7 years. Pembina pays its dividend monthly. So I really like Pembina in my portfolio, and it occupies almost a third. Quick look at Morningstar. Last time it closed at $24. It's got a fair value of about $31, so some nice uptick there. The market cap about $13 billion, as I mentioned a minute ago. What is it? Pembina, much like Enbridge, is an integrated midstream energy infrastructure company in Western Canada and North Dakota. Highlighted by its regional pipeline network, the company operates 9,000 kilometers of conventional hydrocarbon pipelines. Why do I like pipelines? Because pipelines are not subject to the market fluctuations in energy. So whether WTI or Brent is trading at $20 or $40 doesn't make too much difference, other than from a supply and demand point of view. But whatever the prices of oil, they still got to move it through Pembina's pipelines. So there's a little bit of a hedge built in there in terms of protection against the fluctuations in the commodity. Oxy, by now you've probably seen several of my Occidental videos. It also occupies about a third of my portfolio. I've been long since 2019, which is terrible news because that means I opened my position in Occidental originally. I think it was in the high 40s. It might have been close to $50. But I've been buying and adding to it since it's gone down. Obviously, it's trading super low right now. For me, this is one of the most undervalued, large potential low-cost operators in the oil and gas industry. Its market cap is only $11 billion. It should be far greater than that. I don't like the fact that that Oxy cut its dividend yield, but at the same time, I'm glad they cut their dividend yield because it saves them approximately $2.8 billion on their cash flow for the year, and helps them to recover from the large debt load because of the Anadarko acquisition. Even though it's trading so low, still 70% held by institutions and only 5% short. Quick look at Morningstar once again. It closed last time the market was open at $12.25. Morningstar estimates its fair value at about $23.52, and of course we talked about the market cap just a second ago. Company profile. Occidental is an independent exploration and production company with operations in the United States, Latin America, and the Middle East. Unlike Total, at the end of 2019, the company produced net proven reserves of 3.8 billion barrels of oil equivalent and average production of 996,000 barrels per day. We know it's actually tracking at around 1.3 to 1.4 million barrels per day. What are the top 3 reasons why you should not be buying energy right now? Well, MarketWatch says that there is just too much volatility to risk buying right now. I agree, it's very volatile. So if you take a chance, you do know that you're also taking a bit of a gamble because we have no idea where the commodity is going. It may take years for the industry to recover, says Motley Fool, from its historic collapse. So we've already seen a little bit of an uptick. And I think as the pandemic dissipates, we will probably see, I wouldn't say demand returning to normal. That will take some time, but certainly heading back up in the right direction if you're invested in energy like I am. And then it will be a step-by-step recovery process. So it's not all going to happen at once. Mitigating dwindling storage capacity, the ensuring access to capital as the economy recovers, addressing imbalances in supply and demand, etc., are all crucial as the energy industry continues to navigate challenges in the months ahead. And why should you buy it right now? Well, number one, the economy is picking up. After a few rough months, the economy is slowing a nice pickup. One of the key indicators is the unemployment rate, and if you've been following that, you would have known that we've added several millions of jobs since June. Demand for oil products is recovering. Well, as shelter at place orders or social distancing orders have eased, people are using their vehicles more to go out. At the same time, demand for oil products to transport goods is recovering as industries resume normal operations, etc. But as we said a minute ago, it's going to be a step-by-step recovery, and it's going to take a bit of time. And why else should you buy it? Well, stocks are trading at bargain prices. We know that the energy sector is down a lot, and the fall in energy stock prices has been huge, probably worse than most of the other sectors, making oil stocks extremely attractive. But you have to be very, very cautious. So just to show you my total unbiased view, I gave you 3 macro reasons why you should not buy oil, and I just gave you 3 reasons why you might want to buy oil. Now, since psychiatrists say that 1 out of every 4 people are mentally ill, check 3 of your friends. I know that there's none of my 3 friends on this video who actually own the same 4 stocks that I do. So you're all okay. I'm it. And on that note, this is Rudy signing off. Hope you enjoyed the video, and I'll see you guys soon with more information on one of my favorites. Talk to you soon. Stay safe. Keep well. Bye-bye.